Since 2001, the U.S. Treasury Department, through its Community Development Financial Institutions Fund, has provided lucrative tax credit allocations to corporations and partnerships investing in low-income communities. The New Market Tax Credit Program, or NMTC, enables community development entities, or CDEs, who apply for and win these tax credit allocations to then grant those tax credits to their equity investors, providing a powerful incentive to invest in communities that have been traditionally overlooked. Whitestone Realty Capital has been active in the New Market Tax Credit Program since the program's inception. We work closely with key participants and numerous CDEs, providing supportive assurance, tax advisory, transactional, and consulting services for the New Market Tax Credits Program. If you'd like to establish a community development entity, or CDE, and become involved in the New Market Tax Credits Program, there are 6 key steps to the process. Apply for CDE certification, apply for New Market Tax Credits, the allocation agreement, the annual audit, structuring for state and local tax issues, and New Market Tax Credit Program compliance. Let's look at each of these. Applicants for New Markets Tax Credit Program allocations must have received or applied for CDE certification. Unlike the NMTC application process, there is no limit to the number of CDEs that can be certified, and both for-profit and not-for-profit enterprises are eligible. The New Markets Tax Credit application is a competitive and demanding process, with demand far outstripping supply. In 2010, for example, CDEs filed 250 applications requesting $23.5 billion in tax credits against only $5 billion in credits available for allocation. With so much competition, it's essential for CDEs to have a thorough understanding of the application process and to commit the appropriate time and resources to preparing their application. To be eligible, only qualified CDEs and CDE applicants may submit a New Markets Tax Credit application. Once a CDE has been successful in securing a tax credit allocation through the New Markets Tax Credit Program, it will receive its allocation agreement. This document sets forth the range of rules, regulations, and restrictions the CDE must follow as a condition of receiving its tax credit application. In other words, becomes the CDE's Bible during the course of its operations. The agreement must be closely reviewed before it is signed. A crucial aspect of maintaining New Markets Tax Credit Program compliance is having an annual audit performed on the CDE's financial statements by an independent accounting firm. The annual audit is an important risk management check on the CDE's operations and necessary because the CDE is exposed to considerably more risk than a traditional financial institution. CDEs, by design, invest in riskier ventures and place less stringent requirements on borrowers and ventures seeking equity investments. Once a New Markets Tax Credit Program allocation agreement is in place, the focus turns to finding and structuring the loans and investments that are at the heart of the CDE's mission. Researching the CDE's state tax filing requirements and developing the appropriate tax strategy is an important part of the structuring of every transaction. Most CDEs are set up as limited liability companies, which are treated as partnerships for tax purposes. Partnerships do not pay federal income tax because the federal tax code regards them as pass-through entities. Instead, the partners pay individual federal tax on their share of the partnership's income. For CDEs, income is most commonly generated through the interest paid by loans made to qualified, active, low-income community businesses. The New Markets Tax Credit allocation application process is arduous and requires significant documentation. Once an allocation has been awarded, the documentation during the 7-year life of the program needs to be equally thorough. As a federal tax program, the NMTC program is tightly regulated. with a long list of regulatory and programmatic rules and requirements that a community development entity must follow, set by both the Treasury Department's Community Development Financial Institution Fund and the Internal Revenue Service.